Sure. Welcome, everybody, to NFA, or Not Financial Advice Live. I am joined, as ever, Guy from Coin Bureau and Ben from Into the Cryptoverse. Gentlemen, welcome back to the show. This is our can you believe this is our 26th episode?
Wow.
Yeah.
That's great. Gosh, we're fast becoming an institution.
Institution. Hopefully we can get past this, whatever this down funk that we're in. So today we've got some interesting questions. We're going to kind of burn through them, and then we're going to bring on a special guest to talk specifically about CBDC. So the first thing we'll talk about, inflation. Inflation is down. The question, though, is how many rate hikes? What's the probability of a recession coming in? And then I want to take a look at Dixie, the DXY, because it seems like whenever the Dixie goes strong, then Bitcoin goes down, and then the inverse is true. However, Dixie is coming into like it's over 1 year low, and yet Bitcoin really hasn't rallied. So the question is why? Next one, is this a bull run or not? And then we're going to talk about CBDCs, especially I need to get, Guy, your opinion on this one, because you guys put out 2 fantastic videos recently. So first things first, I'll start with Ben. Inflation is down. How many rate hikes? And the reason we talk about this is because there was this tweet from this guy, and he talks about how the CPI, of course, is 3%, expected 3.1, so it's down. Of course, CPI 4.8. And then also this guy did a CPI report on the same subject. And we can see that even though, we think that everything is awful, if we zoom out, we can see that there's some good things happening. I think Jerome Powell's doing his job. And this is from Y charts. You can see the U.S. inflation rate in July 2022, we're almost 9%. Now we're down just below 3 or 2.97%. So the question then is, and I'll start with you, Ben, rate hikes. So we take a look at the CME group. I mean, it looks like it's a foregone conclusion that in the July meeting, it looks like we're going to pump to 525. But after that, people don't believe we're going to do anything else. So what do you got, Ben?
Yeah, that person you were showing earlier, talking about inflation, I wouldn't listen too closely to him.
He's dubious.
Yeah.
He's dubious.
Yeah. So at least if you look at inflation year over year, if I can show my screen here, we can see that it's actually coming down quite quickly, right? And this is actually down to about 3% or so year over year, which is obviously we've made quite a bit of progress here, and that's what we want to see. If you look at a monthly change on inflation year over year, you can see that just a monthly change. You can see that it went down negative 1.04%. I'm sort of speculating that this might be the quickest it descends. And it's not to say that it can't keep going down, but some of the base effects that were once, very helpful for inflation to come back down are no longer going to be there. Like things like oil, it peaked out back in June of 2022. And so when you measure it out, you're looking at it being down 45% over the last year. But if you measure it from, say, like July until this July, it's down only like 29%, which is still, it's not even that, right? It's actually like down 21% or so. So some of the things that have helped bring inflation down are no longer going to contribute as much from here on out, right? So over the next few months, it means that it'll be harder to actually continue this same pace of descent. So I would actually maybe speculate that we could spend a little bit of time in that 3% area. If you actually roll back the clock to the 1970s, when we had our first little run of inflation, it actually bottomed out at 3% in July.
Nice.
But I will say this, though. I am not of the opinion that we're going to see like a rapid move back up on inflation. Like, right. So if you see like in 1974, inflation came soaring back much higher than the first peak. I don't think that's actually going to happen this time, because what I think is happening is I think the Fed, Powell has said so many times they don't want to repeat the mistakes that they made back then, and that's going from QE to QT, rate hikes, rate cuts, rate hikes, rate cuts, which is why I think they're going to go higher for longer, right? And that's one of the reasons why you see, as you showed, right, like CME Group here is still predicting another 25 basis point rate hike. Why are they still predicting another 25 basis point rate hike when you have, the inflation chart looking like this? Right. I think the reason, of course, is if you look at core inflation, it still is relatively elevated. It's been at around 5% for the duration of this year. It's only recently put in something below 5% at 4.86%. If you were to go look at inflation contributions, or sorry, if you were to go look at one of their preferred measures, say core PCE year over year, it looks very similar, right? I mean, it hasn't really budged a whole lot this year. And so I think that's one of the reasons why the Fed is still likely going to raise. I think that they view the risk to inflation as more substantial right now than the risk to the labor market. Because again, they have a dual mandate. So as long as the labor market remains hot, like it has been, I think it's pretty clear cut that they're at least going to stay where they are, if not raise another 25 basis points. And one other thing regarding inflation that might be somewhat interesting to look at is you can actually break it down by category. And this is what it looks like if you just look at, say, like headline inflation. But if you break it down by category, you can see that food and beverages, food and beverages is coming down relatively quickly, right? I mean, the thing is it's at 5.67%. I mean, prices are still going up. They're just not going up as much as they were a year ago. If you look at housing, it's coming down finally. Remember, it was sticky for a long time up here, but it is finally starting to make that move. You can look at apparel. It's been somewhat sticky. You could look at transportation, which interestingly is deflationary right now. It's not disinflationary, it's deflationary, right? Prices are going negative. Medical care is almost deflationary.
That's weird.
Yeah, it's only up 0.131% year over year. So it's not even that far away from being deflationary. But again, it also bottomed out in July of 2021. I don't know what's going on with July, but it seems to be a sort of a pivot point on inflation. Recreation coming down a little bit, and then education and communication have come down some. So, I mean, all in all, I think that inflation is heading in the right direction. But as you can see, there are still some categories that remain relatively sticky, and core PCE, core CPI are still very elevated. And so we're likely just going to see another 25 basis point rate hike in a couple of weeks. That might mark the end of it, because I'm guessing if they do 25 in July, they'll probably skip at the September meeting. And then that would get them all the way out until November, I think. Let me just double check that, right? So yeah, September and then November. So this could be the last rate hike if inflation can continue to come down by November. If it goes back up or remains sticky due to, say, the base effects, and maybe they would go another 25, but good chance this is it.
Yeah, it's a good chance. But I will say this, and this will come to the next point, is that you said it right. You said, look, I mean, even though it's coming down, I mean, we're still increasing. Inflation's still there. This is from Truflation, and this will lead to Guy, because right now, and Truflation has it, I mean, we have it around 2.97. Truflation, with their data point, is 2.47%. But I feel bad for these guys. The Brits, unfortunately, you guys are getting crushed, 11.33%. Yeah. So, Guy, I mean, we can do it, but how's it feel like over there? And what do you think about the rates?
Yeah, I think, well, in terms, certainly comparing to what's happening in the UK, I mean, you've really got to, as Ben said, you've really got to hand it to Jerome Powell and co. You know, they said this is what they were going to do, and they've done it. Well, they haven't done it, but they're headed in the right direction. They're headed towards that 2% figure. They've made enormous progress on it. The rate hikes have worked, and they've managed not to break anything. You know, was it just before last week's live stream that the job figures came in, and it added US had added 500,000 jobs.
Yeah, it was crazy.
Just extraordinary. Yeah, extraordinary. So you've really got to take your hat off to them. So far, so good in terms of the US. Unfortunately, it's not so good in Britain. I think we were a little slower out of the gates. I mean, there's a sense that we're always just kind of waiting to see what the US does, and then sort of obediently follow suit. So I think you've got to take that into mind. But yeah, much as it pains me to say that, but I
don't blame you.
Yeah, I mean, the UK is facing some fairly kind of big problems. Like, it's a hot potato that I don't want to sort of grasp too tightly, but Brexit is still kind of a big thing. I don't think there are all that many people now who are going to argue with the fact that it has had a negative effect on the UK economy. It has opened up possibilities, and we're seeing that we're potentially seeing that with crypto. The idea of the UK becoming a digital assets hub. That is something that will, if it does come to pass, that will be something that was made possible in large part by Brexit. So I want to sort of, I don't want to stray too far either side of that line, but yeah, the UK is has it a lot harder, I think, certainly than the US and certainly than a lot of other countries as well. UK housing market is also, not good, because that's been one of the surefire investments for Brits for many years now, and the business with higher rates is just wiping out more and more people. So there's a real kind of mortgage time bomb that's now kind of going off in slow motion. So we're just looking across the, I mean, I'm over here in Dubai, but I'm still sort of seeing it as a remove. Whenever I talk to friends in the UK, I keep up with the UK news, and it's grim. So we sort of cast envious eyes across the pond to where you guys seem to have a much better handle on it than us.
Don't envy us. Like, look, unfortunately, I wish we could look to you for regulatory guidance, because you guys pretty much have it hands down. Unfortunately, we got a guy named Gary Gensler, and that's just neither here nor there. I will say, for all those things that are happening bad in UK, I mean, on the bright side, if we take a look at the Dixie, I mean, at least itself, the Dixie dollar is showing a little bit of weakness. And this will lead me to my next question. So it's the lowest since over a year ago. Why hasn't Bitcoin rallied? And the reason I ask this, first of all, DXY is at 100.15, and that's over a year ago. If we take a look over 2 years, we didn't see this until April of 2022, where it went below, or around 100 to below. And the reason I ask this question is because if we take a look at the DXY, usually when the DXY has strength, then Bitcoin goes down. We can see this back in 2013 when Bitcoin, and this is a poor example, I must admit. It was $13 when the DXY was up at 83. And then, of course, it went to $1,100 on 2013 when Dixie went down. Now, if we take a look at a better one, here we are in 2017 when the DXY was high at 102. Bitcoin was down. When the DXY went down to 90, went up to almost 20,000, and so on and so forth. Then, of course, a better example, 2020, DXY up, Bitcoin down, so on and so forth. So the question I have, first of all, I'm sure it's nice that the dollar isn't so strong, but Guy, any interpretation as to why DXY is so weak right now that we see it?
I mean, I think it's partly to do with, I mean, that diagram that you flagged up a moment ago. The DXY basket is composed to a very large extent with euros and pounds. Now, both the ECB and the Bank of England have been super hawkish recently, out of necessity. So that, I think, is kind of the euro and the pound are both kind of pretty strong at the moment. So I think that's kind of weighing on the dollar itself. In terms of other currencies, I mean, the dollar's performing pretty well, especially against the likes of the yuan. I mean, I think the yuan is close to a multi-year low against the dollar, if I remember rightly. So, I mean, these things are all relative, but certainly against the euro and the pound, the dollar's struggling. In terms of what that means for, in terms of why Bitcoin hasn't kind of reacted to that, as we were talking about off air, I guess that's because there are still sort of swords of Damocles kind of dangling a little over the crypto market to an extent. One of the ones that we've been looking into recently is DCG, which I think you can argue probably a lot of people have priced in, but I think there is still a lot of potential selling that could happen as a result of DCG having to declare, quite possibly having to declare bankruptcy, or certainly at the very least having to sell assets. So I think there is a lot of uncertainty over that. Obviously, uncertainty over regulation in the US, as you touched on as well. So, although the dollar is weak, I think there's still just a little bit of uncertainty hovering over Bitcoin in particular, and Bitcoin, and to say nothing of the rest of the crypto market. And I think that's kind of been reflected in the fact that it's been sort of trading largely sideways for the past past few weeks now, hasn't it? I think that to me, that kind of hints at just a lot of uncertainty. People are really just kind of sitting this one out and waiting to see which way it goes.
Yeah, I can agree with that. I mean, I think a lot of people are sitting it out because they're like, I mean, they hear so many. I mean, there's so many different sides to this, and what's going to happen if you look no further than channel David Lin. He's got, it seems like one day he's got someone who's like, you know what, we're going to the moon. It's going to be awesome. And the next day, everything's going to collapse and it's going to be Thunderdome. It's going to be awful. So I check out that channel if you want varying opinions and kind of make your own decision. Ben, what do we have with this one? DXY.
Yeah, I'll echo what you said with David Lin. I mean, that guy interviews everyone. So I'm like, if there's anyone in this world that has a pretty good like view of what's going on, like it would be him, because he can maybe put together all the doomer views and all the moon boy views and then come to a more realistic outlook. But you know, I'd love to talk about the dollar, and I will in 1 second. But are you guys reading the headlines that Mashinsky got arrested?
You gotta be kidding me.
No.
Yeah, just hey Rob, why don't you look that up while I talk about the DXY and we pretend to listen to me talk about the DXY?
Absolutely.
You do that.
All right.
If you could show my screen though, that way I can at least try to keep people entertained while you're looking at the whole thing with Mission. So what's interesting is first of all, with Bitcoin, it moves discreetly is the thing, right? So like when it moves, it moves quickly, as you can see, like all year, right? Just not an agree, right? So the thing with Bitcoin though and the dollar is that, yes, you're right. Normally when Bitcoin goes up, the dollar's going down. When the dollar's going up, Bitcoin's going down. One way to visualize that is look at this chart. This is the dollar color coded with Bitcoin risk. Normally when the dollar is going down, again, the Bitcoin risk goes higher, meaning the Bitcoin price is going higher. Bitcoin has been going up, for the duration of this year. So it's not to say that it hasn't been going up. It has been going up. It also moves discreetly. The question is this enough to move Bitcoin even higher? One of the interesting things about the dollar is that while normally it does lead to risk assets going higher, you can find examples where the dollar sells off and risk assets go down. I mean, look no further than the .com crash, right? I mean, you can see that the dollar topped out in February of 2002, but the S&P continued down until October of 2002. Right. So there are examples in history where the dollar and risk assets go down together. I think this is interesting because you have the dollar going down, you have the S&P going up, but then you have Bitcoin kind of going sideways. And I think some of that is due to other factors as well. Like if you look at Bitcoin and net liquidity, I do think that crypto is more dependent on net liquidity than the stock market, and net liquidity has been trending down. The last few days, it's actually gone up. So that's probably a positive for Bitcoin, but it has been trending down really since April. And since April, Bitcoin hasn't really broken out. And so I think you could blame some of the reason on net liquidity in general. And there's of course other things that you could look at, but let's go ahead and stop pretending and let's talk about Alex Mashinsky.
So breaking news. Way to read the room, Ben. That was fantastic. So breaking news, looks like everybody's favorite felon has finally been arrested. And this was from CoinDesk. And they said it's a developing story. We don't know exactly why it is. There's been a bunch of lawsuits. The only thing I can say is that the SEC accused Celsius and the firm Mashinsky, of securities fraud in a lawsuit filed Thursday. Bloomberg reported earlier that they may also face a lawsuit in the CFTC. But that's what we have. So look, to me, it's one of those things where we hear about how people should be arrested. There is some type of negative connotation with what they did, or it's just flat out illegal, or was just a flat out Ponzi scheme. And the question always becomes is, why aren't these people actually arrested? Why are they walking free? And the answer that people will usually say is, well, it's money. It's money and lawyers, and they keep them out. But, at some point, everything catches up to you. Doesn't matter how much money that you make. Take a look at Bernie Madoff. That guy made tons of money, and he had connections all the way through to the SEC, and he died in jail. So with these types of things, I think it can give a little brevity or a little relief to people as they see this and claim a little justice. But again, this would be just the first part. Gentlemen, thoughts?
Rob, quickly add this to the title and you'll get a lot more viewers.
Oh, this will be, yeah, I already did that. Forget it. I was like, don't worry about Ben and Guy. Old news. This is what's going on. So
Forget those guys.
those scrubs. Yeah.
Does this mean that Alex Mashinsky is not the special guest?
No, well,
up?
I mean, I could, but it's hard to get Wi-Fi in prison. I mean, trust me. So on this one, Alex Mashinsky is not the special guest, but the person we're bringing on is going to have a lot to say about Alex Mashinsky and CBDCs. So I feel like I'm glad for the people that got screwed over that would send messages and say, hey, I put my entire life savings into this. You know, they said this was actually like a savings account. That's how they marketed it as. And it wasn't a savings account. It was an obliteration account. So I feel happy for all those people. And, you know, hopefully this is one more step into retribution. So I don't know if we want to say anything more about that. I'll wait for the special guest to come on. But if you guys want to say something, let me know. If not, let's talk about this. Is this a bull run?
I mean, I guess all I'll say is I think, you know, for Celsius creditors, for people who have been stuck in limbo for so long, you know, Alex Mashinsky being arrested is not necessarily going to hasten them being reunited with their funds. But I mean, it must still be a tonic in a way, because I can only imagine that seeing the guy walking. I mean, he was appearing in public, wasn't he? He was. I've seen footage of him at NFT New York. That cannot be a nice thing to have to see this schmuck walking around whilst, you know. So I think that, you know, I'm glad for Celsius creditors on that score, and, you know, it won't necessarily heal all wounds, but, you know, that must be a great relief to a great many people.
Yeah, exactly. And here I mean, when I saw it, I was like, okay. And here in El Paso, we'd say, que huevos. I can't believe this guy can do that. But here he is. All right, everybody. So we'll do a follow-up on the Mashinsky thing. It's a breaking story, but he is arrested. And let's move on. So let's talk about the bull run. Is this a bull run? That's the question. I got to tell you, like, if you want to take a look at it, it kind of feels like a PTSD thing. It seems like we're never going to get around this. But what is this a bull run? Are we in it? Are we out of the bear market? And the reason why I asked this question is we have to first define what a bull market is. And there's some criteria you take a look at. There's a sustained increase in broad market indices. That's up to 20%. I always feel like since our market moves a little bit faster, I would say like an increase of 40%. Investor confidence is high, and there's a strong national economy. And if we take a look, if you take a look at just Bitcoin in general, over the last, let's see here, 0101. I mean, we started this year at 16.6. We're up 80%. Now, the other parts, the other altcoins, has pointed out a couple of times, they are bleeding pretty badly against Bitcoin, and they are down massively from the all-time highs. But like, if you take a look at it,
is there a metric you can use to track that?
I don't know, but what I'd like to do is find a video of someone who talks about it. I mean, it's just scarce, dubious at best. So like, and then we take a look at Solana. I mean, just as an example, I think, let's do it right. We started at $110. And now we're at 22, so we've doubled. I know, like, from the day-to-day, God, Lord, it's boring, right? But I mean, this is where we are. So we have to take a look at, like, how are we doing as far as, like, I mean, just like the GDP. And there's this website in the CRYPTOVERSE, and you can get 10% off every month, or for the first month, I should say. GDP, I mean, we've had a little bit of a breakdown in 2020, but we seem to be doing pretty good. And then as far as like indices, I mean, 20% increase. I wouldn't say that's true. As far as like the last 6 months, we started for the S&P 500 around 4,000. Now we're at 44, so roughly 10%. Dow Jones is relatively flat. But again, in bull markets, just remember, if that's what it is, I'm not saying it is, but even in bull markets, you'll see that there are, you know, peaks and troughs, peaks and valleys. And, you know, it's not like a straight up and to the right. So, gentlemen, what do you think? I'll start with, we just left off with Guy. Ben, what do you think about this one?
Yeah, so I mean, I guess when you talk about is it a bull market, I guess for what? If I show my, if I guess if I can show my screen again, I mean, one of the things that we can track, right, is yield curve inversion. But this is an interesting chart. It shows the S&P ROI too low after the 2-year inverts the 10-year, and a lot of times the market can rally for a year or more. Usually, it eventually rolls over. Is the thing. Sometime when the yield curve uninverts, sometimes even beforehand, right? And you can look at it with a 3-month as well. I mean, actually, if you look at it with a 3-month, it actually looks so far like we're most tracking the financial crisis.
Great.
Right. But I guess the point is like, you know, it's always possible that this time could be different, and the yield curve inversion does not forecast a future recession, right? Like, it's always possible that that's the case. But it would have to mean that this time is different, right? And so I guess it's you know it's on investors to figure out, you know, how much weight do they want to put into that? Like, do they think that the Fed will stay hawkish long enough to make the labor market move, or will the Fed lay off before the labor market starts to show weakness? And I mean, I guess it's anyone's guess, right? It's hard to know. You know, if you know, when thinking about whether it's a bull market or not, you know, if this is a bull market, it's a pretty pathetic bull market for the altcoin market. I mean,
True.
it's funny because I feel like crypto Twitter is always so bullish on altcoins. And then I come over to the total 3 chart, and we just have 3 red months in a row, you know? And I'm just, I think to myself, I'm like, well, have we ever been in a bull market where total 3, you know, had 3 months red in a row? And you can't really see times when that occurred. I mean, the most similar time that total 3 had 3 months in a row was either in, say, like a bear market, or in sort of the pre-halving year, right, where you go half up and half down with Bitcoin. Is probably the other best example, where total 3 also topped out around halfway through the year. So I think that this is more similar to this than it is to anything over here. Because again, if the market has been so bullish, then why is total 3 unable to even get above its November 2022 high? Like, think about that. Like, Bitcoin surpassed its November 2022 high long ago, but the altcoin market hasn't even managed to break through that. Which is pretty pathetic when you think about it. I mean, like, again, like looking at the Bitcoin chart, it broke through it long ago. Here's another thing. Like, so global net liquidity, every prior high for Bitcoin also corresponded to new highs on global net liquidity, right? As you can see. But right now, we're not really seeing global net liquidity go up in a sustained way. I mean, it has bounced here over the last week, but the ECB, you know, just lowered their balance sheet by quite a bit. The Fed's going to keep lowering their balance sheet, so on and so forth. I guess the biggest question is what happens out of China and Japan. I mean, are they gonna expand some more and sort of lead to dueling, you know, monetary policy, so that, you know, the West is trying to reduce inflation while the East is just basically printing money and saying, well, you know what, we don't really care. I don't know. But what you can see is that normally when Bitcoin's putting in new highs, it also corresponds to new highs in global net liquidity. And I think we'll eventually see new highs in global net liquidity. I just don't think it's going to occur this year. You know, it could occur next year. It could occur the year after that. I don't think it's going to occur next year. Or this year. And the last thing I'll say is, if you look at year-to-date ROI for Bitcoin specifically, like if you're talking about Bitcoin, it's actually still tracking the average of 2015 and 2019, right? So like 2015
perfect.
is up here, 2019 is up here, and then the average is right here, and it still continues to track that. So you can call it what you want to. I'm still thinking it's about a half a year where we go half up and half down, meaning like about half the year is green, half the year is red. If Bitcoin is still rallying come September, then clearly that view is wrong, right? If you know, if it does, I mean, in order for it to go half up and half down, it has to roll over at some point, right?
At some point.
Yeah, like at some point within the next like 4 to 8 weeks, I would think that it has to roll over. Otherwise, that thesis we would say is wrong, I think. And again, I mean, from a seasonality perspective, this is often during the pre-halving year where Bitcoin starts to roll over. I mean, it has shown some renewed strength around this time. Actually, if you look at 2015, it was basically on this day that it found its local top before going into a double bottom.
Yeah.
If you look at 2019, it had already topped out a month or two ago, but it had a sort of a month ago, but then it had a double top in July. And then if you look at 2011, it topped out back in June. So as far as I can tell, this is more so just a rotation of altcoins to Bitcoin, and that's why the Bitcoin dominance is going up. This is the dominance excluding stablecoins.
Never heard of it.
Yeah, I don't know. Yeah, it's a new metric, but it's been going up since 2022 started. This is again dominance excluding stables up since 2022 started, and so I think it's still just the rotation of altcoins to Bitcoin.
Yeah, it's amazing. It feels good because it kind of validates that those 4-year cycles we talked about, like those reset years, 2012 halving, all-time high dip reset, right?
Right.
That was 20, and then of course 2016 having all-time high dip reset, 2019 the reset year. We're in the reset year. 2020 having all-time high dip reset, and of course if it's tracking just like 2019 and 2015, it's the same thing happening over and over again. But that would come back to the next question. Well, this question to Guy. Guy, is this a bull run? And I think it's a bigger question, which is, does it even matter? It doesn't even matter if we say, yes, this is a bull run. Because for some people, like, hey, I invested in XYZ. It's not a bull run for me.
Yeah. Good question. I just want to point out as well that Ben got in his first mention of Bitcoin dominance exactly halfway through the stream.
That is good.
Bang on halfway. It's very impressive. It's almost like he planned it that way. I think maybe people are playing a sort of game of Bitcoin dominance bingo.
Yeah, you're not gonna get drunk on this one.
I saw a comment. I saw a comment about 10 minutes in, and someone said, "We're 10 minutes in, and Ben hasn't mentioned the dominance. What's going on?"
Exactly.
Halfway through, it's good going, Ben. Maybe is that a bullish indicator? Who knows?
Dominance is in a bull market. Dominance is in a bull market.
Yeah, see.
It'll gradually just sort of creep back until we go through a whole stream and he never mentions it once. That's your moment. Are we in a bull market? No. Short answer. I don't think we are, but certainly in terms of Bitcoin, it's certainly looking. The picture is looking a lot rosier than it was just a few weeks ago. And I think the data, what we were talking about earlier on in the stream about data from the US, inflation's going down, these interest rate rises are having their effect. So it does look like the overall economic picture is beginning to look a little better. But that said, I go back to Ben's very good point. So much of this strength of Bitcoin is most likely coming from altcoins, which are still, if it's a bear market, if it's a bull market, I hate to see what a bear market looks like.
Good point.
So, and obviously, I think in terms of sentiment, I'd be interested if we had time, if Ben has any particular charts on that we can have a look at regarding sentiment. But I think a lot of the excitement around Bitcoin in the last couple of weeks has obviously been around this ETF application, spot ETF application by BlackRock and many others. And I don't think there's any doubt that if that is successful, then that will be extremely bullish for Bitcoin in the long run. I don't think we'll necessarily see a massive run up in the price, but certainly it will be good news for many reasons, most of which we've discussed over the past couple of episodes of this. So there's definitely a lot of good sentiment surrounding Bitcoin. I think, though, that whole ETF business, I think it's great. It's potentially great, but the downside to it as well is that it could still be rejected. And I know opinion is very, very divided on this. I know, Rob, you think perhaps you still think it's very likely to be rejected.
I hope not.
Think it's more. What's that? You hope not?
I'm sorry. I said I hope not. I just think it's not needed. Yeah.
Yeah. I think a lot of people share that view. I think there's a stronger chance it'll be approved rather than rejected, but that chance of rejection still remains. And if that does happen, then that will be ugly. I think we'll see I think we'll see a dwindling in Bitcoin's price in the wake of that. One thing to keep a lookout of, and something that I was discussing in a video that I was filming earlier today about DCG, is this lawsuit going on between Grayscale and the SEC. You remember, I think it was last year, Grayscale came out and sued the SEC in order to try and turn their Bitcoin trust into an ETF, and that lawsuit is obviously still ongoing, like so many other SEC lawsuits. Now, if the SEC approves that ETF, BlackRock's ETF, for example, that kind of immediately is very likely to mean that they lose that case against Grayscale, because the precedent will be there for a spot ETF. So in theory, why can't Grayscale's Bitcoin trust be converted? So I just wonder whether the SEC is likely to do that, to essentially shoot itself in the foot by approving a spot ETF before it's got Grayscale, beaten in court. So again, I still think there's a strong chance that this ETF will get approved, but I think people are putting placing a lot of faith in that. And all I would say is that you've got to be aware of the other side of this. Yes, it gets approved, hooray! If it gets rejected, ugh,
watch out.
Nice. Yeah.
Well, excellent points. Speaking of misplaced faith, this will go to our next one, and I'm going to start with Guy, and I'm going to bring in our special guest, CBDCs. Guy, you did talking about ugliness and the things that are happening. This is one of the things that kind of like scares me a little bit. CBDCs. Now, you did a couple of videos. One, which almost had 200,000 views about the global CBD system, and then of course this other monster over here, central banks are planning. But just give us like a little quick breakdown about what is happening with the CBDCs, and I want to bring in our special guy.
Sure. I don't want to speak too much about. I don't want to ramble too much, because the guest has got a lot more and a lot more intelligent stuff to say about it than I have. Referencing that central bankers video, that was an extraordinary discussion between central bankers. They were really grilled by Sarah Eisen from CNBC.
Right.
And at the end of this grilling, she asked them what they are optimistic about. And Christine Lagarde of the ECB and Andrew Bailey of the Bank of England, they both said the things that make them optimistic are the progress that the ECB and the Bank of England have made on their CBDC proposals. So that, I think, was really telling. And that it tells me a few things. Firstly, these are actively being worked on, and I've talked about this a lot, but make no mistake, CBDCs are coming. That is, you can be 99.9% certain of that. I think the date to keep an eye out for is 2030, because that is the deadline for the UN's Sustainable Development Goals, these SDGs. Okay. I've talked about them in many, many videos. They are, in large part, not exclusively, but in large part, the origin of technologies like CBDCs, the digital IDs that CBDCs will need in order to work in the way that the central banks want them to work. So there's still a lot of work to be done on CBDCs, but that work is being done. It is still mostly in pilots, in the pilot phase. There was a headline, I think it was just yesterday, that Brazil is piloting its CBDC now. And what was significant about that was they reverse engineered this code that the Brazilian central bank had posted, and they saw that this CBDC will be programmable, in that the central bank will be able to move money out of people's accounts. It'll be able to freeze people's account. It'll have total control, in other words. And that is what CBDCs are about. They are about government control. And like I say, they're coming within the next few years. And I think the thing to watch out for, the Trojan horse, if you like, is going to be fast payment systems, like, for instance, FedNow, which should be released fairly soon in the United States. We've got fast payment systems up and running in many other countries. The UK's had one for several years now. But obviously, fast payment systems have a lot to recommend them. They're fast, as the name suggests, but they're convenient. They're convenient and easy to use. And this is how CBDCs are initially going to be sold. They're going to be sold as a medium of convenience. And that is how, I think that the plan is to get them adopted. People are going to go, well, this is easy. This is frictionless. Why would I go back to another system? Why would I use anything else? So I think that is the first kind of stage. That is how they will be sold. And I think one other thing I'll say before our guest comes on is that I think one of the things that's on the side of CBDCs is demographics, because I think cash use in particular is something that older generations are really the only ones who are kind of clinging on to in any sort of numbers, because they're used to cash. They remember they've used it all their lives. They're unwilling to give it up, and they're willing to fight for it. They're willing to fight for its retention. And we have seen pushback against CBDC projects for that reason. In places like the UK, there's been significant pushback against the UK's plans for a CBDC, largely by people who don't want to see cash phased out. Unfortunately, those people who fight for cash, who want to use cash, are going to die out, to put it bluntly. And the generations coming through behind them, they're used to, they're used to not having to use cash. They won't miss it. They won't care. So I think the apathy of those generations coming after could be a big weapon in CBDC's armory, if you like.
Perfect. So this was great because you just did a great analogy or a synopsis of why CBDCs can make it. Now I'm going to bring in someone who can help us how crypto could actually defeat it. And that guy is Simon Dixon. Simon, welcome to NFA Live. You are our first guest after 26 episodes. Welcome to the show.
Awesome. Thanks for having me. Good to see you. Is my mic working? We didn't do any test.
I know. Look at that. You're really improving, because the first time we did a show, you're like, is this on? I'm like, that's not on. This on, this on. Today, my man, spot on, doing perfect stuff. So look, that is the big question. CBDCs, what's the master plan, and can crypto defeat it? Because I think you're pretty well versed in this, because you were in the traditional finance sector for quite some time. You were out there giving speeches and going to universities and talking about the simplicity of what Bitcoin actually is and how it actually works. So what do you think about this? How can we defeat it? Because Guy made a great point of why it's going to be accepted.
Yeah, I think Guy made most of the important points there, that this is inevitable, it's predictable, and it's guaranteed. So that book that I wrote in 2011 gave a roadmap of the inevitable consequence of fractional reserve banking, that it leads to a communistic style of organizing a digital currency. And I talked about how you would unwind a systemic risk event using a central bank digital currency. I just didn't call it a central bank digital currency because the name didn't exist back then. But in answer to what it does, think about, Guy said the right word, he said control. A central bank digital currency is think about crypto in the middle, this general innovation of a blockchain cryptocurrency. And we always debate back and forth saying that, you've got proof of work, proof of stake, and you've got these different degrees of centralization. And everybody, debates there's a bit more centralized control in the development. Proof of work is impossible to 51% attack. And for over a decade, we've been going back and forth with those debates. If you think of the two extremes, on one side of the extreme, you have a central bank digital currency, which is a crypto, which may even not have a blockchain. You could use cryptographic ways of sending digital currencies. And the fastest way and the most controlled is simply a database. But a central bank digital currency optimizes that on a global scale, where it can interact with all the different systems around the world and automate every layer of control in order to automate monetary policy, automate the execution of fiscal policy, universal basic incomes, controls where your funds are connected to negative interest rates, every type of application you can imagine. And then on the other extreme, you have this thing that governments would love to shut down, that they can only really ban in their own country. But if they ban it in their own country, they end up on the wrong side of financial history. So they might as well just stick it on their central bank balance sheet, which is Bitcoin. And so you've got these two extremes. And everybody, every government, every company, and every individual has the opportunity to protect themselves by opting out of a CBDC and opting into Bitcoin. And the challenge with that is that you have these, you have that Bitcoin's not so great for spending. So you end up with a bit in your CBDC because, you don't want volatility in paying your rent. But a CBDC is going to be very, very optimized for spending. However, it will cost you your freedom, your privacies, and just like money at a bank right now, when you reach a certain net worth, your money at a bank, you feel surprised that your bank lets you spend it. I've got to send an incredible amount of documentation to my bank. My bank is a private bank. They know I earn my wealth in Bitcoin, and I need to show them every single thing that they could possibly want to see about every transaction I've ever made in history just to spend my fiat currency. And that's what happens. And CBDCs allow that at a very automated scale, eventually probably managed by artificial intelligence, powered by quantum computers. But eventually that's what CBDCs do. And so the only way you can protect yourself is by owning Bitcoin, opting out. And then in the middle, you have these problematic innovations like stable coins, DeFi, which are going to be defined by different countries. And so by understanding those sit in the middle, they're disruptive because most CBDCs are backed by treasuries. So they're systemically risky to the banking system, to the fractional reserve system. Now, where CBDCs actually sit is not competing with Bitcoin.
Right.
Is competing with banking. And so a CBDC is the most disruptive force to a bank because a bank is a private digital currency. Every time they issue a loan or you borrow money, they create new digital fiat and it exists in their centralized database. And then you can send it through SWIFT to different countries, or you can send it through their faster payment systems like FedNow eventually, or ACH, or faster payments. And so the banks get to benefit from what's known as seigniorage. Seigniorage is the profits from creating money. Governments and governments benefit from cash. That's why it still exists. They actually have, if you look at a government's treasury's balance sheet, they've got something called seigniorage income, which is the profits from selling their cash to a bank, and a bank pays for it with digital currency and puts it in their ATM. A central bank digital currency is radical reform. So the banks are going to be the ones that are going to object to it the most, and they're only going to adopt it when they go bust. And so CBDCs are inevitable, predictable, and guaranteed because fractional reserve banking is a Ponzi scheme. Fiat currency is a regulated Ponzi scheme. And eventually you can either give up and go back to hard money, or you can just give up on capitalism and return to communistic fiat currency. And Bitcoin then becomes your way of protecting yourself.
Excellent. So Simon, let me just paraphrase. You're taking a look at this and going, really, it's not crypto that's going to be affected by what's going on with these CBDCs. It's going to be these small to medium-sized banks that's really going to start to hurt. Is that what we're looking at?
Yeah, 100%. If you look at this in its extreme, you get the small banks being gobbled up by the big banks, the big banks having a 2008 style level of systemic risk, and then the central bank that needs to take on everything in their balance sheet. So individuals either need to go deeper into debt to save the fiat currency system, or companies, or countries, or central banks. And then eventually the central bank will take everything on its balance sheet. And then, this is why I think Bitcoin survives, the CBDC that becomes the world reserve currency, I think is the one that exerts the most level of freedom in a competitive market. So if you use draconian CBDC power, you will not maintain your world reserve currency status. And because Bitcoin exists and people have an opportunity to opt out, and any country that says, let's make it illegal to convert CBDC to Bitcoin, they will lose some of their world reserve currency status. The ones that don't put Bitcoin on their balance sheet moving into when they can do that in 2025, will be the countries that will be losing on the wrong side of these wealth extractions on a global central bank digital currency world. So I have hope for freedom, and I don't think you get this global coordinated CBDC-backed ban at the Bank of International Settlements and the World Economic Forum, because they will take these different countries down with it, and someone will renege in that agreement in a world of geopolitics where competition amongst CBDCs is the one that will be the next world reserve currency. Excellent.
And this is why we brought you on, Simon, to explain that, because the way the guy was talking, I was like, this is not looking good. But right now, after you said it, I'm like, hey, I think we're in a pretty positive place. So we got about 5 or 7 minutes, and we'll take some questions. But I got to ask you the first one. We already went through this, but I don't know if you heard about this, but our buddy Alex looks like he's not doing so hot, and he just got arrested. So this was breaking news, just broke. Looks like there's going to be a massive lawsuits filed, CFTC and the SEC. What's your thoughts?
Yeah, I was, anyone that was on my Twitter feed, I was warning everybody that this wouldn't be a good month for Alex Mashinsky, and now the news is broken. So for the background, Rob and myself have a bet. And we bet that I said that BlackRock ETF will be approved by Q1 2024. And Rob said it won't. And the loser has to wear a T-shirt saying, I love Mashinsky. And the reason that's such a big thing is because I'm actually one of the largest individual creditors, top 10. There's a few more institutions that are larger. And for the last year, I've been working. I went to a Spoke at Guy's event, and I literally had a queue of hundreds of people that have all been ripped off by this scam artist. And so for the last year, I feel very connected to this subject, Rob, because I first broke. I was trying to support Celsius in a plan of reorganization, and I was speaking to Mashinsky. Then I found out what had actually happened, and the fact that he had lost $3 billion of client money, and it was completely fraudulent, and he had exit scammed everybody. He was using our money to pump up the price of Cell token so that he could sell it OTC. He borrowed against client Bitcoin without disclosing any of the risks. He deviated from the model of institutional peer-to-peer trading, and he persuaded hundreds and thousands of pensioners to drain their life savings and retirement accounts in order to put it into what he called safer than a bank, because the banks are ripping you off. So we've all been discussing CBDCs, but for the last year, we've had people commit suicide. We've had pensioners have to return to work. We've had people change country because they can't afford in a cost of living crisis. And I've been dealing with thousands of these people over the last years. It's consumed a whole year of my life. And so to see justice served, that this scumbag has now been arrested and the justice system takes over, it makes a little bit of what everybody has experienced over the next year, worth it slightly. So, it's a deeply emotional topic for many people, because these are people that worked their entire life, believed in a lie, went to Miami, looked at him face to face and said, is my lifetime savings safe with you? And he said yes. And he was withdrawing his money, tens of millions, out of the platform on the very same day that a retiree that we just did a fundraiser for, was actually, sold their house, sold everything, and looked Mashinsky in the face to ask for it. So it's a very emotional moment for a lot of people. And it's ironic that we broke the news on this channel and you invited me here not knowing that it would happen. And while we're live, the news broke. It's pretty crazy.
Oh, I knew it. And actually, I'm more the news guy, and Ben's the one that actually to tell me. He goes, hey, I don't know if you knew this, but Alex just got arrested. I was like, really? I should probably know that. So excellent. So everybody, moving forward, hopefully we're good things on the horizon, and we see a better times moving forward. But Simon, thanks for stopping by. The question that just came up, which I think is a good question, and we'll get out of here. Is it possible investors are front running the halving this cycle? Meaning right now, are the people like us kind of getting into it early before that BlackRock ETF does or does not get approved? We'll see what happens. And I will tell you this right real quick, Simon. I will happily wear that shirt if it does get approved. It'll be great for the whole industry. So, gentlemen, who wants to take this one? Is it possible investors front run the halving the cycle? I know Ben thinks that bulls get wrecked, bulls get wrecked and Bears get wrecked. What do we think about this one? I'll start with Ben. We'll go around.
Like anything's possible in financial markets. So I don't think anyone could say definitively whether it happens or not. We have seen this before. I mean, I lived through it in 2019 and in 2015, where, you know, the cries for new all-time highs came in the pre-halving year, and then it didn't pan out that way. And so, I mean, look, could this time be different? Sure, it could be. I don't think it's the most likely scenario. Normally what happens is people, you know, and this is why I've said, like, this is why we focus on the dominance, right? If you have your crypto portfolio as just being Bitcoin heavy, it doesn't really matter, right? Because the altcoin market gets wrecked against Bitcoin regardless, and it protects your downside while giving you some exposure to the upside. But what normally happens is that people in the pre-halving year, they watch Bitcoin go up and their altcoins get sidelined and the altcoins don't go anywhere. And then they chase the altcoin, or they throw their money into altcoins because they think the altcoins will catch up to Bitcoin. But then the altcoins never do catch up to Bitcoin in the pre-halving year. And then they throw in the towel and they say, all right, well, let's just go in on Bitcoin. And then normally by the time that everyone decides that, once they realize that Bitcoin is the king of the cryptoverse, that's when Bitcoin pulls back. And that's when it gets everyone wrecked, right? And that's why the pre-halving years are so brutal. So yeah, I mean, look, anything's possible. I know there's some theories out there by some by some analysts who have credibility that, you know, some people say new highs are coming this year. Some people say it's going to happen early next year before the halving. I tend to lean on the side of highs will come after the halving, but anything's possible.
Yeah, I like this tweet that you put out. This is from Standard Chartered, and they said that, hey, we're going to hit 120,000 next year, or by end of 2024. And you said, hey, just 7 months ago, they said it's going to go to 5,000. So just watch out for those crazy price predictions.
The reason I put that out is because I saw someone talking about how Standard Chartered was like a super prestigious organization and how they wouldn't put their name behind Bitcoin if they didn't really believe in it. And I was just curious, I'm like, well, what were they saying back in December? I'm like, all right, well, they were putting out the opposite price prediction. So it's almost like, were they accumulating? And are they selling into the high? You know, I don't know. I mean, I really don't know. It goes to show you how useless price predictions are.
Exactly. And then Guy, this led me to you, same thing. Are we front running, or is it just like, this year's kind of shot? Who knows? What do you got?
You just can't move for price predictions these days, can you? Everyone's kind of weighing in with one. It must be proven to generate a whole lot of clicks. Look, I don't know, to be honest with you. I think there's certainly a strong chance, especially if the ETF get approved, that I don't think we'll see a new all-time high this year. Definitely not. But certainly, I think we could finish the year, you know, much higher than we are now. Having said that, I think if you just take a longer term outlook, that's the way to do it. That's the way you can be much more assured of success. You know, Bitcoin is a long term hold. So if you're buying now, if you're buying later in the year, so long as your time frame is spread over the right time, you'll be fine.
Exactly. You know who said that pretty eloquently? I mean, you did a great job right there, Guy. But there was an interview that you did with this gentleman right here, which you can find on his channel. There's a link in the description where he talked about the 5 rules and the different wallets. Simon, what do you think about this? The same question. Are we front running? And is it just a good idea just to stack sats?
Well, it's a good idea just to stack sats. But yeah, front running is... I say Bitcoin is the only asset class I've ever come across where retail got to front run institutions, institutions got to front run sovereigns, and sovereigns got to front run central banks. And that has really been the story. But if you want to bring that down into a short-term time frame, I think you're playing with the big boys now. So we've had, do exchanges manipulate prices? Absolutely. They've got the information flow. They manipulate it. Is that moving more regulated, where you can have more sophisticated manipulation? Absolutely. Traditional financial markets are manipulated by hedge funds, central banks, governments, and it's all legal and regulated. So we're just moving to a new phase. You will get wrecked trading the short-term cycles, trying to get that one. I do believe personally, I don't really care if I'm wrong or right, we would reach all new all-time highs next year. But yeah, the idea is if you can train your mindset, and I tried to cover it in the video where the guy did a great interview. I think, it's when the price goes down, if you value your wealth in Bitcoin, then you end up with more Bitcoin and you're excited for the price coming down. When the price goes up, you can look at your fiat worth and you can get excited that your fiat net worth is going up, but you're getting less Bitcoin every time you buy it. So it's a bit of a how to be happy all the time, no matter what the price is doing.
Perfect. I got to tell you, I want to thank everybody for stopping by for this episode. This was really great, power packed, a lot of information. And you know what? Right as I say this, it's going to be 1 hour on the dot. So, gentlemen, thank you so much for stopping by. Again, you can find links to Guy, Ben, and Simon's channel, links in the description. But gentlemen, thanks so much for stopping by. And everybody, we will see you on the next one.
Yeah.
See you, everyone.